doing? Are you discoing? Whee! Why? You gotta fess up to the boogie, will ya? Fess up. How you guys doing? I hope you're doing wonderful. I hope you're doing fine. This is a brief about the gold technical analysis and what influences it, which is dollar, the DXY, the King dollar, and the bond yields. And we're gonna start right now with the King. Hope you guys doing wonderful. Let's start with the Japanese candles. What I see right here, I see a confirmation of a morning star, which is a very good, reliable 3-day pattern of Japanese candles. It starts with a red day right here, an incision or star, then an up day and a confirmation. Good deal. So this, I see this in the price action. So what I see in the price action, the sellers sold the 20-day moving average, which is the mean reversion trade, which is expected. So there is nothing bearish about that. It could be later, but nothing bearish about that yet. Okay, so what do I see in the momentum indicators? I always talk about the positive divergences everywhere and how important it is to change the trend, which was and still is so far downward. So you have the actual trend changed. The positive divergence started in December. So you have a low, higher low, lower, lower, low. And I talked about the RSI and how important it is to find this stuff. So usually whenever you come out of the positive divergence, you have an important, strong up move like what happened here. What happened here, the low was 91.75 and the high here was almost 95. This is a huge in the currency market. So I'm expecting at least a move like that. So you have A, B, C, which this one, from A to B, C is equal 1 to 1 right here. So we might have sellers at the upper end of the Bollinger Band and consolidation, then A, B, C. We'll see. I don't know the future. I'm just speculating right here. I'm just speculating. So Morningstar, positive divergence in the daily time frame. Let's talk about the weekly time frame. Weekly time frame, as I tweeted to the two people that are following me in Twitter. I don't have a lot of followers. I'm okay with that. Not even subscribers. So I'm okay with that too. Anyway, I'm not crying. Anyway, this is the weekly time frame for the DXY and how similar the price structure is here to here with the same duration. And no one knows the future, but we try to speculate. So let's talk about price action, the weekly time frame. We have a nice hammer and a bullish Harami that needs confirmation. So it's 2 in 1, right? So we've been having 3 bullish candles back to back. We had an inverted hammer and a bullish Harami right here on 21st of December. Then we have a price rejection from like so-called bear trap. Then we have a hammer, and we will see if we confirm it next week with a higher open, then price expansion to the upside. And the same thing with the positive divergence right here, and it mimicked the same price structure back in 2017 till April 2018. See the higher lows right here. So we will see what's going to happen in the King dollar. Yet I'm very bullish because of these things I talked about in the daily and the weekly. Let's talk about TLT, which represent this right here, so people can understand what I'm talking about right here. Good deal. So there is an inverse relationship between bond prices and the dollar, and a positive correlation between bond yields and dollar. The higher the bond yields, the higher the dollar. The higher the bond yields means it's an implication of a higher interest rate, or an expectation of inflation, whatever you want to call it. But the relationship between the bond yields and dollar is very, very intact. So this chart right here assumes higher yields, lower bond prices. So we broke down from June 5th, 2020, and we tested that breakdown area and we failed. Yet this is a bullish candle right here. So as far as the level analysis is concerned, we're still in a breakdown mode. As far as the Japanese candles, it's wait to be seen. Okay, so we are in breakdown mode here. So 2 days back to back, good deal. And also the stochastic is telling me the momentum is really, really weak, which might indicate lower prices, higher yield. If you have lower prices, higher yields, you have higher dollar. And that's how the theory goes. Good deal. And also, back in 2018, late 2018, the movement of the yield prices in the bond market gave me an indication that the interest rate would not be over 3% as the consensus at that time. So sometimes you can use the bond yields to speculate, and sometimes that type of speculation will give you an impression or expectations about the state of the dollar in the future. Okay, so if the yield prices go up, doesn't mean the interest rate would go up in the same amount. That it's all it implies the direction of the interest rate. If the direction of the interest rate goes up, the dollar goes up. Okay, capisce? Good deal. So this is TLT. So another case against gold. Positive bullish actions in the dollar. Negative actions in TLT, which is bond market, which indicates a positive ticks in the yield prices. Good deal. So let's talk about gold. Gold broke down right here from the uptrend line, and now is testing all the price memories, like right here in 14th of December and this one right here. So what I do usually, I take the high to the low and I run Fibonacci extensions. I'm not gonna run it for you so you could learn on your own self. So the high here is 1962. The low here is 1906. So 1962 minus 1906 equals such and such. Then multiply that by 1.27 Fibonacci extension, 1.38, 1.50, 1.62, and you might speculate where this breakdown might take the price action to. Capiche? Good deal. Same thing with GDX. GDX is very usually right here. That was an indication that GDX will have a mean reversion trade, and this one happened. So you established that target of mean reversion trade, and you closed I think over the 50-day moving average. Yes, you did. And the 20-day moving average, which is bullish, but it doesn't mean the direction is up yet. And as I stated in my video how to trade gold like a pro, GDX and gold, you cannot analyze them with themselves, period. You will get caught, you'll get hurt, you really will hurt yourself. So right here, you might have had a bull flag right here. If you run this pull right here, and from this high here, no, you have a bull flag. Yet because of the dollar movement, I will never, I did not touch GDX, even though it was a bullish price action. So in conclusion, GDX's dibble buyers here did not take in consideration the bullishness of the dollar. You must do that. So I really don't know what GDX is going to be. I will watch TLT closely, and I will watch the dollar closely in the weekly and daily time frame, and see where it might go to. So my advice: if you gold bug, watch the dollar, watch TLT, and please like if you like, subscribe if it's your first time, share please if you want me to do. If you really think this is helpful, I swear to the holiest of holy, which is disco. I'm sorry if I offend anybody. I'm joking. Uh, if uh, if I had enough participation, enough likes and comments and subscribers, I would post this all the time. But because I only have 300 something subscribers and 2 people following me on Twitter and whatever, I don't have that encouragement. So encourage me. If you are passive, if you only care about yourself right here. If you find me helpful, help me help me grow so I could post more and upload more. Love you guys, and please remember that nothing is forever except this goes forever.